Welcome to the channel and thank you for choosing to watch this video. My name is Jonathan and I work in the offshore global business industry. In this video, we will cover the definition of nominee and explore nominee companies used by various individuals within the context of the global business sector. First, we will go over the standard definition of the word nominee. Second, we will touch upon what a nominee company is and some of the benefits associated with it. Third, we will cover the purposes of nominee shareholding with regard to personal and administrative convenience, as well as confidentiality. And lastly, we will elaborate on the common types of nominee structures that exist around the globe. I hope you enjoyed this video and wish you a reflective and insightful viewing. A nominee is an individual, partnership, company, or legal entity entrusted with the responsibility of holding and managing shares or other assets as the officially registered owner on behalf of the genuine owner, otherwise known as the beneficial owner. Functioning as a trustee, the nominee maintains the shares or assets and appears as a designated legal owner in public records, substituting the beneficial owner who possesses effective ownership and control. The nominee being the legal owner in name only, while the beneficial owner holds an equitable interest in the shares, signifies that the beneficial owner has a rightful claim to acquire formal legal title from the registered owner, or the nominee. In essence, an equitable interest denotes a right or interest in a property that grants the holder the potential to obtain the official legal title from the registered owner. A corporate nominee, such as, for example, a nominee company, is commonly employed to act as a trustee for holding shares on behalf of the beneficial owner. To ensure the beneficial owner maintains authority over the shares, a formal agreement is established between the nominee shareholder and the beneficial owner. This agreement, usually called or referred to as a nominee agreement, explicitly declares that the shares or property are held in trust by the nominee company for the exclusive benefit of the beneficial owner, and that the nominee's name and particulars will be utilized in official documentation. Moreover, the nominee agreement may delineate specific terms, including whether the nominee shareholder, as the registered owner, can exercise any control, such as voting rights, over the shares. It is customary for these agreements to expressively address voting rights, and in most instances, the nominee shareholder refrains from voting unless expressly instructed or authorized by the beneficial owner. This framework ensures that the beneficial owner not only retains ownership, but also exercises control and decision-making authority over the shares held in trust by the corporate nominee. But this depends and is based on a case-to-case basis. Under Mauritian law, specifically the Financial Services Act 2007 or the FSA 2007, nominee companies are permitted to exist under a few conditions. Such nominee companies may only be set up and administered by management companies, holding the relevant license issued by the Financial Services Commission of Mauritius, or the FSC, under Section 77 of the Act. In turn, Section 78 of the FSA 2007 dictates the lawful and legislative requirements for nominee companies, which stipulates that a company possessing a management license has the option, with the prior approval of the FSC, to establish a nominee company for the specific purpose of carrying out the functions associated with nominee entities. The nominee company to be created must be a private company operating in accordance with the regulations outlined in the Mauritius Companies Act 2001. It is required to explicitly restrict its objectives to serving as a nominee company concerning corporations and related incidental matters. Additionally, the nominee company is obligated to remit specific fees to the FSC as outlined in the FSC rules. The predominant motivation behind the adoption of nominee shareholding is personal convenience. Overseas investors, whether individuals or companies, often encounter challenges in the day-to-day management of shares. Engaging a nominee can streamline operations, save time, reduce costs, and mitigate the potential loss of opportunities due to time-related delays. For instance, share brokers frequently employ a nominee company to facilitate transactions, ensuring that clients retain the authentic ownership of shares. From an administrative standpoint, the use of nominee shareholder is a prevalent strategy to segregate shareholding activities from other business endeavors. Additionally, within a group of companies, a nominee may serve as a repository for shares acquired before determining which specific group member will ultimately hold them. Alternatively, the nominee may function as a centralized holder for all shares collectively owned by the group, enhancing administrative efficiency and strategic flexibility. Opting to preserve anonymity is frequently within legal and legitimate bounds. This choice may stem from personal considerations, such as an individual's desire to keep financial matters private, especially if they hold a prominent position as a politician, public servant, or journalist, where the revelation of substantial wealth might lead to embarrassment. Conversely, a company aiming to assume control of another entity might seek to maintain confidentiality about its identity. This strategic decision serves the purpose of encountering minimal or no resistance during the initial stages of the takeover. Additionally, it may facilitate the acquisition of shares at a more favorable price, as the market price tends to rise in response to a takeover bid. In a shareholder nominee structure, the nominee company assumes the role of holding shares in a given company as a representative of the beneficial owner. This arrangement is frequently employed when the beneficial owner has a preference for maintaining anonymity or wishes to keep their shareholding details private. Under this structure, the legal ownership of the shares is vested in the nominee company, while the beneficial owner retains the true economic interest and entitlements associated with those shares. The nominee company's name is recorded on the company's official documentation, including shareholder registers, instead of revealing the identity of the beneficial owner. This confidentiality aspect is particularly valuable in situations where individuals or entities desire discretion concerning their shareholdings, whether for personal reasons or strategic purposes. The use of a shareholder nominee not only safeguards the privacy of the beneficial owner, but also streamlines administrative processes, as the nominee acts as a conduit for any official correspondence or communication related to the shares. It's a mechanism that balances legal formalities with the desire for privacy, allowing beneficial owners to participate in the financial benefits of share ownership, while avoiding the public disclosure of their identity in connection with those holdings. A bare trust nominee represents a structured legal arrangement in which a nominee company assumes the role of the legal title holder for specific assets. In this arrangement, the nominee company acts as a custodian, holding the assets for and on behalf of the beneficial owner. The crucial aspect of this structure is that while the nominee company holds the legal title, the beneficial owner maintains full entitlement to the income and benefits generated by the assets. Essentially, the nominee serves as a trustee, having legal ownership but with no active rights or control over the assets' benefits. Those rights and benefits remain firmly vested with the beneficial owner. This arrangement is often employed for its simplicity and clarity in delineating legal ownership from beneficial ownership, ensuring that the economic interest and advantages stemming from the assets are rightfully retained by the beneficial owner. In a context of a director nominee, a nominee company takes on the role of serving as a corporate director of a company, acting as a representative on behalf of the beneficial owner. This arrangement becomes particularly beneficial when the beneficial owner seeks to create a separation between themselves and the day-to-day management responsibilities of the company. Under this structure, the nominee company is officially designated as the director, and its name is recorded in corporate documents and filings instead of revealing the identity of the beneficial owner. The beneficial owner, while maintaining control over the strategic decisions and major aspects of the company, effectively delegates the routine management duties to the director nominee. This is a valuable strategy for individuals or entities who wish to avoid direct involvement in the operational intricacies of the company, or, for various reasons, prefer not to have their identity publicly associated with the directorship. The director nominee arrangement offers a level of privacy and operational convenience for the beneficial owner. It allows them to maintain a discrete profile while ensuring that the company adheres to legal requirements regarding the appointment of directors. This structure strikes a balance between strategic management control and the desire for a degree of separation from the day-to-day operational activities of the company. Thank you for watching this video until the end. This is hugely appreciated by me, and I hope it provided you with valuable information, insights, and key takeaways. As always, I will be posting frequent and insightful content, so feel free to come back to the channel for more videos concerning the offshore, global, and financial services industries. Stay safe and healthy, guys. I'll see you in the next one. Cheers.